doing here? $6.40, up almost $1 on that news. Now shares reversing here sharply, moving lower on ATII.
ATAI, seen the volatility, following two headlines on the name. First, they Sciences and Effective Sciences announced a U.S. FDA breakthrough therapy designation for BPL-003, followed by a proposed public offering of common shares, ATAI, on this volatility.
What's up, everybody? Let's give it a minute or two because I signed on a couple minutes early here, 4:15, but I'm just getting some stuff together here anyway. How's everybody doing? Mid-October already. You believe this shit? I shouldn't be cussing. You believe this crap? What else is there that we look at? Oh, this. All right, I think I'm ready. Let me start muting some stuff and we'll get rolling here.
Mute. STAA Star Surgical affirms that no acquisition.
Mute. Mute. And one more mute. I can't even touch this. Hold on. This you got this in-between weather here on the East Coast, right? I mean, I like it. I like when it starts getting cooler. But like today, I got the landscaping guys here. They should be done, right? These landscaping guys, they bang me out for every last penny. But it's a nice day to open up the windows, and I can't open it up because his leaf blower will blow your eardrums out. And I'm stuck in a pickle here. What do? Put on the air, die heat. You know, big problems. These are the more important problems we face on a daily basis. All right, I think I'm ready to go. So the screen's okay. Screen's okay. You guys can hear me. Yeah, I'm gonna have to let me put on my central there because I'm gonna work up a sweat. I think. And why should I do that? Hold on. Give me 1 sec. Yeah, the temperature's at 73 in here. That's too hot for me. I can't function in that. All right, that should cool things off. We're all good, right? All right, I'll keep the mic. During the day, I don't have the mic too close to me. That's why I'll keep the mic closer to me. All right, very good. So, some interesting time in the markets. That's always fun. A couple of things definitely worth talking about. just to kind of rewind, because again, some people are new to this, and there's a bunch of you that are not STEAMROOM members. So I just like to rehash a couple of the more important things, get everybody caught up to date, and then kind of dive into where things stand and how we interpret things currently. Okay, so if you guys remember, last Thursday we talked about how just we're heading into a period now where it really is going to be a tough. We have no edge, right? A lot of the most of the stuff in the STEAMROOM we look at comes down to sweeper activity, right? That's kind of our confirmation and momentum indicator, and positioning and sentiment, right? And there are times where the sweeper activity, right? So that's kind of your timing mechanism in a sense. You lose some of that edge because you go into a period of time where it's either earnings season or there's a binary event, and there's a lot of hedging type of activity, right? Stock replacement, protection, rolling. So I mentioned to you guys last Thursday that kind of what I'm doing about it, because we're going into earnings season, and on top of that, on big monthly OPEX, we're going to lose the signal from sweeper activity completely outside of intraday signal, right? Outside of intraday momentum, there really isn't much of a read, at least in my personal opinion, in regards to the flow. Okay, so I thought there was a perfect time to kind of take a step back, focus on scalps intraday, try to make a little money. More importantly, buy myself some time. On top of that, with the current backdrop, even if it wasn't earnings season or OPEX week, for example, I mentioned to you guys I probably would take that approach no matter what, because there were a few things out there that, I hate to use the word worry or concern because I don't want to be too dramatic, but there were some stuff out there that we look at and keep tabs on that was getting me feeling a little uneasy, okay, about things. And what I mean about uneasy, I felt there was some stuff that was signaling to us that if you look at this game through the lens of a risk reward, right? And I feel everything should be looked at through risk reward. There was stuff out there that was showing us that the reward side of that equation was getting chipped away at. In other words, the risk was potentially growing, even though maybe not at a major rate, but you still at the least have to take on the same type of risk, but the reward wasn't worth it, right? And a lot of times, especially when a rally or a trend is long in the tooth, that's an important signal for us to take it easy and chill out a little bit until some of this stuff gets resolved. Okay, that doesn't necessarily mean the market has to have a major pullback or correction. Sometimes it could be just digestion. It doesn't have to result in anything climactic. But it's, again, not a warning signal, but a signal that you've had a solid couple of months, and that's an understatement. The more important thing, I guess, is the best way we were phrasing it. It's a good time to worry about protecting the bulk of the money you made over the last few months, as opposed to looking to make more of it. Okay, and that's, again, in simple terms, generally the approach and the way I was looking at things. Okay, so now we got a little bit of volatility in the market pullback, which you guys know how I feel about that. That always, even if not on a short-term basis, that always, because that's a good thing, because a lot of those things that were making us feel uneasy, that's how they get resolved, right? In a quicker manner. The longer they linger, they rarely just go away. The risk just keeps growing and growing. Okay, so we got this market pullback, and just quickly to start to mention again the action I'm taking off what I'm going to show you guys, and then I'm going to show you what I'm looking at, and you come up with your own game plan, obviously. But for me, nothing really changes approach-wise, okay? Even with this market coming in and some volatility showing up. More so of the reason, one, it just started, but two, we're heading into an environment where I lose one of my sharpest edge in this game in regards to flow, right? So to get a cleaner read on sweeper activity, we at least probably got to get through the heart of earnings season, which still is at least a week and a half, 2 weeks away. All right. So my approach is going to remain the same. I'm looking to just intraday trade off any aggressive activity I may see, even if it's rolling. It really doesn't matter to me as long as I think it can create momentum. We'll talk about that a little bit more if any of you in the Steam room have questions about that. But I'm not looking to put on any overnight risk here. Obviously, until at the least we probably get through the next couple of weeks and we see, some of the issues resolved that we're going to look at in a second. Okay. So again, that's where I stand. And again, from the bulk of the stuff I'm going to show you right now and we'll talk about. And if you guys have any questions, obviously ask away. Okay. So here's a few of the things that got me a little uneasy. First and foremost, okay, and I just put a stock chart up here. This is just one of a gazillion. We've talked about all these names ad nauseum. Probably every single one of us have made a good amount of money over the last few months in many of these names. Okay, so I'm not, excuse my French, shitting on these names. If you like them, don't take it personal. You shouldn't take anything in this game personal. All right. I'm just talking about the overall sentiment in regards to this pocket of the market. Right. My opinion, you got basically what we've been seeing as close to what would look like a blow off top in a lot of these speculative names. Okay. I get it. You guys think they still triple from here, maybe 10 years from now. Regardless, I'm talking about the type of price action, the type of sentiment amongst traders who are in these names, right? From my experience, and I've been in the game a long time, I feel that we're seeing kind of the elements of at least an intermediate blow off top in these names. Okay. So again, does that mean they have to stop going higher now? No. I mean, again, I was making these comments a week or two ago and they continue to make highs, right? I have no idea when the music stops. I have no idea when the momentum stops. Hence why I never try to short these things. Okay. But at the same time, you would have to put an Uzi to my head to get me to buy these things up here with your money, right? So there's a big difference. But again, just looking at, and we could sit here and we can rattle off probably at least 100 names off the top of our heads, from quantum names to AI names to space names to now rare earth names and mineral material names, robot names. Yeah, you get my point, okay? They've all gone bananas, okay? And, the last time we saw something that resembles this was in 2021. Many of you remember the GameStop era time of year there. What was that, May? I keep forgetting, April to May 2021. SPACs, if you remember the SPACs, the new version of IPOs, doubling and tripling literally in a day. So the last time we saw something like this was then. And back then that marked a significant top back in 2021. All of those names, all those pockets of the market never made a new high again. And then obviously we went into the 2022 bear market. Okay. Again, do I know if this is going to be as dramatic as a 2021 high where you don't see new highs in these things and they crumble down to where they started? Because that's what happened in 2021. I'm not smart enough to make that observation. Okay. I'm not even going to try to, there's no reason for me to even try to wreck my brain around it. Okay. But from what we're seeing, again, has the elements of at least something like that 2021 high in these types of names. Okay. And I'm just trying to think of questions you guys or rebuttals you would have for me. Like, again, not taking shots at you guys, but just anybody I speak to regarding this. And I'm trying to answer them at the same time. Is it possible they run into the end of the year? Sure. All right. Why couldn't they? But what I'm saying is, again, the risk is, in my opinion, so significant up here that even if you told me the momentum was going to last in a sense to the end of the year, I still wouldn't buy these things. Okay. Again, that's just me. So when you're seeing pockets of the market, and it's more so on the speculative side, it's not an overall market thing, but you're seeing a kind of frenzy euphoria that gets me feeling uneasy, obviously. Now, going back to 2021, just to give you guys an example, the market sold off for a couple of days, the overall market. So it really didn't have any huge effect on the overall market, even though those names, like I said, topped out and never made a new high and started at least consolidation correction from there. The rest of the market continued on to make new highs, right? Until the calendar flipped in 2022. All right. So that's what's got me kind of torn here, is that even seeing that doesn't necessarily mean that this could be a market-wide problem. These names just aren't big enough to be a market-wide problem. And, back then I was even more concerned because they almost blew up multiple hedge funds with the squeezes in those names. Now, hedge funds are more prepared. They've been through this already. So you're not going to have too many hedge funds blowing up off short squeezes in these names. You may have retail players and traders, but you're not going to have too many hedge funds who especially traded through 2021, right? They learned through that. So that's why I'm really, for the market itself, it doesn't concern me in a big climactic, dramatic way, more so for these type of names. All right. So that's first and foremost. Again, you got a little cooling off today or the last few days in a couple of these things. But obviously, you can barely make out the dip in some of these things. They've been up so much. We talked about correlation, right? And a lot of times when a market rally or a bull trend gets long in the tooth, continues to move to rally and make new highs, and you don't get kind of a rinse or a washout along the way, you start to see things like this, right? Where correlation levels get so low that even when there's more upside in the indexes, it's so random in what names are going to participate in the rally, right? You've been seeing that now for a good, at least a month, if not more. Okay. We were spoiled and fortunate at the same time that for those of us who do trade these cheaper speculative names, there was a ton of momentum in so many of them that we really didn't feel the effects of correlation. But if you traded anywhere outside of those speculative names, trust me, if you're frustrated, this is probably and more likely the reason why. Example, financials have been dead money and now are selling off, right? Over the last month while the indexes went higher. Home builders, anything, rate cut plays, so many different pockets of the market that really didn't participate in any more upside as the indexes continued higher. Even within sectors, right? So you have, like, let's say even the Mag 7 names, a name like Microsoft, Meta, dead money, completely dead money as the indexes have made new highs, okay? And that's very common when you get correlation levels so low, okay? And the problem becomes that you're getting long and you're putting on risk in a market that looks bullish and looks like it's moving higher, but the stuff you're buying is not moving higher with the indexes. So you remember what I said early on, how the risk reward, the reward side of that equation gets eaten away at? That's exactly what I mean by that. You're still taking the risk of being in a market drawdown, right, and losing money. But even if the market continues higher, there's a good chance with correlation levels this low that your stock may not participate in the rally, right? A lot of randomness to it. So that was another big reason. Yeah, I don't want to be aggressively long in that type of environment. it's quite the opposite, right? After correlation and volatility spikes, the unwind of that, when there's a big tailwind and broader participation, that's when I want to get sloppy long, aggressively long. Right? Here, where we're seeing something totally different, I don't want to go anywhere near that, right? Because obviously I can find myself in a lot of trouble doing so. Okay, so that was another major reason. We saw that again back earlier in the year before the correction. Very similar, where correlation was lingering at low levels before Trump and the tariffs and the correction. Okay, another thing we've seen recently, we talked about last week, with the indexes, equities moving higher, right? You have VVIX, which we like to look at for early signs of some of the smart money putting on protection, even though it looks like a risk-on environment. You had the indexes continue to push higher, and you can see it on this 4-hour chart. And at the same time as equities are moving higher, VVIX remained bid, right? So the vol of volatility remained bid even as equities continued higher, right? Usually an early warning sign for some sort of rinse, or lengthy digestive period, right? When you see things like that, okay? And we talked about that last week. But now what you're seeing is kind of this VVIX, even as this market bounced back this week, this VVIX has been shot out of a cannon, right? So you got equities have bounced off the recent low after pulling back, and look what VVIX has been doing in the interim. Okay, so hasn't confirmed any of the risk on in equities we've seen this week. Credit, again, there was no glaring warning signs in credit, but again, just with everything else, I think that we were seeing, we were starting to see a little bit divergence in credit spreads, right? Some more than others, but same thing. As indexes continue to push higher, okay, credit spreads weren't as bullish. Okay, they weren't aggressively widening out into the rally, but they weren't confirming the rally. Okay, again, VVIX credit spreads weren't confirming the upside we were seeing in equities of late. Okay, again, I'm going through all the stuff. We've looked at this, but now you're getting an up-to-date look of all the stuff that was grabbing our concern a little bit. Liquidity and financial conditions. Okay. Again, I state this all the time because I don't want anyone to get the wrong impression. I am no liquidity expert, far from it. I follow a couple sources that I have faith they know what they're talking about, and I kind of go off that, right, over the years. And basically, I just look at it in simple terms. What we've been seeing, well, put it this way, since the liberation lows of the correction, liquidity and financial conditions have been screaming risk on bullish, screaming. Okay. You had most global liquidity indicators shot out of a cannon, right? Because basically you had every central bank across the globe cutting rates. Okay. And you had financial conditions loosen dramatically. Here's into the lows of the correction, right? So the higher it goes, tighter financial conditions. And the opposite, looser, okay? Look how dramatic this turn from those Liberation Day lows in the correction. Really, really aggressive, okay? So for both financial conditions and liquidity was screaming risk on throughout the rally. And what we've been seeing here recently is, again, a little bit of divergence, which is normal, okay? Which is normal. But we've been seeing financial conditions tighten a little bit, and liquidity kind of sputter out in a sense, okay? Top of that, a few of the people that I do follow in liquidity have some concern about a few things out there of recent, okay? So that just added on top of to what I was seeing just with the naked eye, right? Again, a potential hurdle in liquidity in the near term here, okay? So again, that's a change. What else I got here? Hold on. We talked about how these systematic funds, okay, were not a problem back when everybody, especially perma bears, were trying to make them a problem 2 months ago. Okay. Well, we had systematic funds have been long and strong for a good minimum 2 months of this rally. Okay. The problem with these systematic funds is not when they get to max long, is when they're at max long and the momentum starts to shift, right? So what we're seeing now is we're seeing some volatility enter the mix. We're seeing a little weakness in the equity indexes. And now you have to keep an eye on some of these major levels that potentially can crack, and then get these systematic funds to start unloading some massive supply. Okay. One of the short-term levels that we're eyeing right now, one step at a time, is around that 6,500 and change mark. Okay, on SPX. That is where they reduce some of their long exposure. Okay, so they're at full tank now. Let me see, I got a chart here. Okay, so they're at full tank right now. Max long, meanwhile, meaning they can't get much longer than they are. And as SPX cracks some levels on the downside and VIX cracks levels on the upside, they start to unload. Okay, the big number is where they flip short. That's usually, and sometimes you get it gets front run if we're approaching that number. That's where a lot of these systematic funds not only are taking down their long exposure, but now they're getting aggressively short. Okay? So it just adds to potentially that waterfall type selling, especially on a shorter term basis, if these levels start to crack. Okay? So something to keep an eye on. And you can see, that applies to all the equity indexes here. This is from Citi pointing out all the different levels here. Okay. Where are we here now? Here's systematic funds. So what you saw with CTA, they're more like trend followers. This is CTAs and the vol control funds that trade solely off VIX. Okay. So as VIX breaks levels to the upside, they are unloading exposure. Again, no thought behind it, no emotion behind it. Just like they were pressing to the upside as we rallied out of the correction, they will be dumping, no questions asked, as VIX cracks levels to the upside. Okay? So again, it's just downward pressure, downward momentum that you would like to avoid getting stuck long through, right? And this was one of the other things, again, that we were looking at. Remember, throughout the rally, especially we were down here lingering, usually you don't get a turn in momentum or a potential even intermediate top until you see some the fund flows capitulate, right? So what we were seeing, the market continue to rally off those corrective lows, and fund flows lingered around the zero mark. I remember even dipped short for a little period of time, meaning outflows, okay? Over the last couple of weeks, you can see how this thing shot higher, okay? Meaning that people finally give in, right? They watch the market, they see the market go higher, they're not bullish, they look at everything around them, they're bearish. All right, fine, let me have some, okay? Again, that usually doesn't always equate to a major top, a major high, but usually at the least get some sort of volatility in the mix, potential rotation in the mix, something to that effect. All right. This was before the correction earlier this year. And this is currently here. This was actually when the 2021 high, the GameStop high I was referring to. So the market itself didn't really even top out in a sense, but some of the overheated areas, right, the more speculative areas that were really built up, they topped out. And that's what we're seeing now. It's something very similar to 2021. Okay. Here's some of the stuff that isn't flashing any significant caution signs yet. Okay, so I'm showing you some stuff that's got us uneasy, but at the same time, there's outside of this hot pocket, this speculative area, for the overall market, there's no significant concern out there, at least that we're seeing yet. Okay. Now, again, you had this regional banking issue where the regional banks, the financials got hit today on liquidity concerns and stuff like that. Maybe we'll start to see it show up in some of these credit market signals, but they haven't showed up yet. Okay. You're looking at credit default swaps here, basically normal behavior. You had a little of divergence before the sell-off, okay? Continued as the market sold, but kind of got stuck here now, right? So what you don't want to see is this continue to widen out, because what this would signal is a potential problem, right? Think back when the regional banks had an issue back in 2023, okay, with the SIVB crisis. You had swaps and spreads widen out, but even back then, they started to tighten long before even those equities found a low. So the credit market signals were telling you it wasn't a major problem back then, even as people were screaming bank runs on Twitter, if you guys remember. Okay, so these are important to keep tabs on, especially now that the market's finally cracked a bit. Okay, but no big concern there yet. And at the same time, did I post it? Yeah, I did. Credit market volatility, the MOVE index, hasn't budged. All right. So if there was a credit risk out there, right, something systemic, but liquidity issue wise coming out of these banks, you probably see it here. So this is telling us this is more kind of an equity VIX, right? Equity and equity vol type of thing. And it makes sense, right? Because if you guys remember, one of the big problems, probably the most bearish thing that was occurring as the equity rally continued, was that there was aggressive offsides positioning in VIX, shorting of VIX, right? Remember talking about that? Here you're seeing the other side of that, where Sharpies, commercial hedgers, actually have been aggressively getting long the VIX, even though they aren't necessarily hedging their equity exposure, index exposure, okay? And the reason being is because of that lopsided positioning in VIX futures, okay? Here's the problem. With the government shutdown now, we have no update on this information for weeks now, and probably for weeks to come until the government reopens at whatever point, okay? So, yeah, another thing to add to the column of making me feel uneasy, not really wanting to put on any risk. I have no access to Sharpie information at all. I have no clue what's going on there right now, and it's really important, whether you believe it or not. I mean, especially right now that you got this type of move in the vol complex, if they're aggressively selling VIX, that's as bullish as a signal as you're going to get. But we have no idea what's going on right now. No idea. So on top of everything we looked at, right, a little bit of uneasiness out there, you have a government shutdown that nobody seems to care about. All right. I get it if kind of the market was correcting and people were worried about the government shutdown, then you wouldn't worry about it as much, right? But now, with all these little concerns and the government shutdown and nobody seems to care, that doesn't make me feel any more bullish. So, again, these are the things that we've been looking at. The market, I think, is responding now, which is good. And I think now what you start to look for, at least what we're going to start to do in the steam room, we want to start to look now for divergence on the other end. Right? So do credit markets signal the worst is over while there's still volatility around? Right? Do people start to worry and get bared up now? And considering that they're really outside of these speculative pockets, there really isn't much, if I can create my own word, bullishness out there. Okay? Here's the problem, though, that I think a lot of retail traders are going to run into. They look at overall sentiment in the market. Now, I'll give you an example. Okay, here's today's AAII down to 33.7%. Okay, so bulls knocked off there completely, right? What a lot of some of the retail traders and momentum traders, they're going to extrapolate that information into, all right, now I could go buy Rigetti up 500% because everyone is not that bullish anymore. All right. Where again, back in 2021, if you did that, you got your rear end handed to you. You know what I mean? So I think the trickiest part of this market, again, this market has barely come in here, right? Even with VIX doing what it's doing. I think the difficult part about navigating this market right now is even if you don't feel, because I don't, barring some calamity in the financial system, right, which I don't think is happening, I don't think there's a market problem here. I really don't. But the problem is besides making a play on the index and stuff like that, when things get washed out, what comes out on the other side? All right, that's the more difficult question to answer. Okay. And that's what I think we need to kind of look for clues. The problem right now is we don't have sweeper activity to provide those clues. So we got to wait a couple of weeks and get an idea what the flow may look like from that point. So the quick and short answer to what to do from this point forward, I think myself, I'm going to look for more tactical opportunities. Believe it or not, it may come at the index level more so than names, the complete opposite of what I've done throughout this whole rally. I haven't touched or looked at the indexes at all throughout this whole rally. It's been all about names. That probably has to change here for me, at least in the short term, to try to play some of these, tactical sentiment signals and stuff like that. But the majority of stuff I'm doing for now, at least for the next couple of weeks, is intraday momentum stuff. Again, more to bide me some time and see what the other side looks once we get flow back. But again, I think the more important part to acknowledge here is, I don't see a market-wide problem, but, I say that in jest too because, we're not even getting all the economic data now. We're kind of in the dark here. You understand? If the economy slows, but we don't get a recession and we get a more aggressive Fed, that should be really bullish for a lot of this market that hasn't participated of late. Okay? But we have no idea what's going on here. Right? We have no idea what's happening economically, let alone what the Fed may do without even having to look at data. Right? So, again, just add more mess to what already is messy, in my opinion. Okay? But does anybody have any questions or any confusion on your part to what I've shown or any of my concerns here? Let's see. Gold is the only thing that keeps going on. Right. And, that's it, right? Let's add one more here. You got gold absolutely ripping here. Ripping. Now, again, every time I look, the headline's up. Gold's higher again because of rate cuts. But meanwhile, everything else that should be rallying off rate cuts is not rallying. Right? Or gold is rallying because of, the debt or this and that, where Bitcoin would be ripping too. And that's not the case. So to just add some more confusion to the mix, you have gold going bonkers here. Absolutely bonkers, running through all stop signs. So what that means, I have no idea. I'm being honest with you. I don't think anybody does. Institutions and hedge funds are not positioned long at all. Institutions have done a little bit of buying. They kind of toned it down over the last few weeks. Hedge funds have been net neutral throughout this whole entire rally. Okay? But like you look, okay, you take the speculative part, you take these names out, okay? You take these names out of the equation, take them out of the market, and you really don't have much heat. You really don't have much heat. the majority of heat of more recent is tied to AI, right? Off news, kind of like the AMDs of the world and stuff like that. And, that happened recently, okay? Right? The semis. But overall, market-wise, there hasn't been much interest anywhere else. It's been all about that speculative part of the market. And that's where all the heat is. That's where all the heat is. I mean, you see, we went from nobody, the revaluation in these Bitcoin miners is hysterical. Because you guys remember, and not to toot our own horn, but we've been talking about that for, I feel like, forever now. Right? That these things aren't Bitcoin miners anymore, right? They're kind of data center plays and stuff like that. But now they've gone parabolic, right? You got analysts recommending HUT at $56. 56. I owned HUT after averaging up at an average cost of 12 and change. You got people pumping it at 56 2 months later. You know what I mean? It's crazy. It's crazy. And, I get the don't fight the Fed. Yeah, okay, I understand that, but there are exceptions. There are exceptions where the Fed is late in cutting, and there's some rockiness before that. Okay, so don't fight the Fed. What does that mean? I chase a HUT at $55? Is that what you're telling me? Because that's what everybody's doing. If I'm not going to fight the Fed, okay, I'm going to buy a name like Lennar or something like that. But that's not what's going on. Right? These rate cut plays aren't benefiting. In fact, the regional banks just crashed today. So, again, I'm not saying I have the answer. You guys know my whole outlook on this game. All right? I don't know more than I know. That's for shit sure. But, a lot of the excuses you're hearing from bulls who are flat out chasing blow off moves are, nonsense. Nonsense. You can't justify this. I don't care what anybody tells me about these type of names. Okay? The future may be as bright as can be. 100% right. Okay? 10 years from now, maybe. There is nothing that justifies a stock like this with zero revenue right now going from $7 to 60 in 3 months. Nothing justifies that. All right? So, but I think that's in my opinion, that's what's got me out of my bunker right now. Because if most of the market looked like this, I'd be in my bunker. No, all kidding aside, I'd be like earlier this year, right? Where I just had no interest in getting long anything until the market legitimately corrected, and we had glaring bull sentiment signals across the board, right? But that's not where I'm at right now. That's not where I'm at. Because, again, there are parts of this market that are underowned, significantly underowned. That if the money rotates into these areas, which is certainly possible, you could have a full-fledged start of a bull market in these areas, as crazy as it sounds. So, again, adds to, I think, the trickiness here. But you guys understand, when I see things like this, one thing I've learned in this game, when I see things like this, right, and it adds to the mess, okay, it adds to the trickiness of the backdrop, I don't fight that. I don't get FOMO in an environment like that. You understand? Rigetti can go to 100 for all I care. I'm not going to get any FOMO to chase Rigetti here. You understand? Actually, it's quite the opposite. Emotionally, what happens to me is that I really tone it down. I reel it in. The trickier the environment, the backdrop looks, the more nimble, the more tactical I try to become, right? The cleaner the setup, the sloppier I become, right? The more I want to hold things, the longer I want to hold things. Right now, there's no incentive for me right now to put on any new risk anywhere. Okay. There are areas of this market set up, but again, if we see flow start to show up in these areas in a few weeks, right, that's a different story. I'm definitely interested. But right now, especially with all the action just rolling in these same names, maybe a Rigetti right now, if they, let's say next week they come in and they storm some weeklies and the stock is down 3 and you can play it intraday for a couple points, yeah, no doubt. But not for me to take a swing position or even hold it overnight. I have no interest in holding any of these things overnight right now. Okay, so that's kind of how I'm looking at things here. What squawks do I use? I probably subscribe to every squawk you can think of. I switch them up here and there. Benzinga, Trade the News. The other ones have the word squawk in them. Squawk this, squawk that. You name it, I probably used it. What is missing for rate cut plays to start really profiting? That's a good question, people. It's probably more aggressive rate cut talk, more dovish talk from Powell, more than likely. You understand? Like a lot of players out there probably think that the Fed's not being, like, whether you think the Fed should be more aggressive or not, okay? I think there are good and bad answers on both sides. I kid you not, right? Because you got bubbles perking up here, right? You got liquidity, a flux all over the place, okay? So there's an argument to not cut rates, certainly. But at the same time, you have areas like housing that are frozen right now, right? So you got other areas that just can't deal with elevated rates, especially when they're used to lower rates for a lengthy period of time. So, but this is what happens when you get the Fed puts their hand in the cookie jar, right? This was the warning back even in 2008. Once you go down this path, you can't unravel it. You understand? Because the economy gets used to running on low rates and QE. You can't just take that away. So, but the answer to your question is they probably are looking for a more dovish Fed. And again, that's, I don't even know if that's the case because it could be different things for different pockets. But when I say like rate cut plays, you got housing, you got a lot of these like financial names, right? These commodity names and cyclical names, we've seen them perk up a little bit of late. But they really, haven't caught fire in this rally. But that's what I still, guys, and you guys know I've been saying this, and it hasn't really, even with the market rallying as it hasn't really come to fruition. But if the Fed gets aggressive or more aggressive, and this economy doesn't go into a recession, okay, I think you really got a big part of this market that can get lit on fire in a good way that nobody's in. And I think that's including small caps, right? Which we've talked about. Now, we've seen small caps outperform, and I don't even think this has matured yet. I'm trying to think of the proper word. You guys know what I'm saying? Like, I think this has caught up recently, but it still didn't. That big right tail risk we were talking about still hasn't occurred. It still hasn't occurred. Hence why I'm still bullish small caps, longer term, right? I'm still bullish small caps. You know, if we get a correction in small caps, you know, the indexes I'm talking about now, obviously, I definitely would want to add back what I chiseled away and rolled into calls. You know, I would want more exposure. So again, that's why I can't. I'm not. You guys know I'm never a bear in a sense, but I'm not uber cautious here. You know, I'm more cautious on certain parts of the market than the overall market. I think there's a big chunk of this market that has a lot of catching up to do. And ultimately, again, this is more of hunch, so I want to state that. But I think that's what like the White House is trying to do here now. You understand? I think their goal is to start to get the Trump economy running, right? The Trump agenda going in a sense. And that I think is a more cyclical, small cap driven bull theme. You know, what we've been seeing now is just speculation in theme-based, right? The future type stuff, right? So everyone got bullish AI. They're like, oh shit, AI is blowing up even faster than anyone thought. What else is the future? Robots. They're going to be here tomorrow. Let's go buy robot stocks with no revenue, right? Oh, quantum. Quantum's not going to be here for 20 years. Fuck it. Let's buy these stocks. Take them to 50, right? So that's what's going on now. A lot of speculation behind it. Like when you get the bull market I'm referring to, okay, and again, don't get me wrong, I love what we had. I enjoyed it. I profited from it. I'll take it every month. I really would. Okay, so don't think I don't like what we went through here. You guys know that. For those of you who know me, okay, I got trolled for liking it before these things got hot, and you guys know that. But what I'm talking about is names, small mid-cap names benefiting not off speculation, not off some guy on Twitter who's touting it going to 500. Fundamentals. You understand? The future of fundamentals improving. So you start to see profitable small cap, mid cap companies that their fundamentals are starting to turn. They've been dead for a long time. And then now the future starts to look bright, right? Estimates are starting to go higher. That's what you start to see in a real bull market in these things. What we've seen now is just pure speculation. Pure speculation. Ah, exactly, CEO. I got trolled for liking Plug. Meanwhile, that thing was the hottest stock for a couple weeks. But, that's what we see. Like, I think, if I'm not mistaken, there could be others. I think Irene, and I don't know much about the fundamentals, but I think this might be the only profitable name, right? I don't know, is BE profitable? But the majority of them don't have even any revenue right now. Oh, BE is profitable too, slightly. But you start to see names like this, the right side of their chart start to turn, and they start to break out. And they don't do this, obviously. They don't go to the moon in a month. Nice uptrend, higher low over the course of a few months. Right? Like real stocks they look like. This is just pure insanity here. No, I'm sorry, nothing justifies it here. Nothing. And I like BE. You know what I mean? BE caught a ton of flow. Like even this wasn't even necessarily a spec name. Didn't start out like that. Like the fundamentals were improving, the story was getting better, but then now it just got caught up in the frenzy, right? But even this is what more I'm referring to, kind of how Hood was participating before it got crazy here. You get this type of action. Right. So, all right, let's talk about, because I like where you guys' head's at. Let's talk about other parts of this market. Where again, for me, it's still a little bit tricky because these names are already owned and already hatched in a sense. But somebody's mentioning like a great name here, CRDO, which many of you in the steam room know, right? This is what I mean. Right? So these type of names. Now, this is part of the issue this market has faced. The majority of these type of names are all AI related. All. Because that's where all the growth has been. You understand? This is a legitimate growth name, in my opinion. Okay? Fundamentals drove this stock. Unlike the names we were looking at earlier. Okay? Now, again, not to say this thing has already had a huge move. Okay, but I'm making the point that fundamentals were the key driver in this thing. Right? So we've seen more stuff like this. Again, AI was the reason why, right? Any of these type of names tied to AI, that's where the crazy growth has been fundamentally. Honestly, DJT looks good from here. Well, again, like the DJT, I mean, this is, if I took my dog, right, and I brought him over here, and I said to my dog, one of my dog's name is Google, right? Google, come over here. Take a nice hot shit right next to this chart right here, right? And if Google took a nice hot poop right next to GJT, I think maybe the poop might look better than the DJT. So just so you guys get a mental picture, that's what I think of like a DJT fundamental. Does that make sense? No, but all kidding aside, maybe you're right. Maybe they squeeze it. Maybe there's a hype job. Who knows what Trump? Maybe he comes in and buys this. What Trump has done in this market, I haven't seen throughout my career, makes my eyeballs roll back. I can't believe it. Outright, buying stuff. Put it this way: insider trading in politics, especially the White House, you wouldn't get the president to talk about the market, let alone tout names and buy names. I'm sure they did it behind the scenes, right? This White House is just out in the open. You got Trump's sons taking positions in like HUD, right? They come out and pump rare earth materials and minerals. You don't think Barron and the boys are gobbling up these names before they go nuts? Come on. So, but it's insane. It's insane. By the way, we didn't even talk about Sahil and I were looking at him on the Sunday webinar with a couple of you guys. The rare earth plays. What about that insanity? Insane. These names. And I guess, what makes it more insane? I guess because of where we were buying and selling these names. Like we owned all these names over the last few months, right? Because all these names caught aggressive activity. But they're all 100, 200% higher minimum from where we sold them. And again, you talk about, uranium's the future, but I get it, but these are speculative names. These are garbage. Like, look at this, okay? 16 million in revenue and hasn't seen profit since Kennedy got shot. That's not likely to change either. You know what it is, guys? I've seen this before. I've seen all this before. Time and time again, over and over again. I'm in this market since 97. You know how many pockets like this I've seen go bananas? And you know how many of these pockets I've seen go bananas and then end up exactly where they started, if not lower? This is not a new story. This is as old as the market itself. You know, some runs are larger, they last longer, but they all end the same. They all end the same. Okay, it's really difficult. And I know, like, there's nothing, the best feeling in the world is owning a name like this, and it turns into the next, I don't even know what name, like, what name would you even look up to in this group? Let's say like a CCJ, right? It becomes the next CCJ or something. But the pain that you will have to hold through to get to that point, if it pans out, you have no idea. You have no idea how many corrections, how many shakeouts along the way. You better have a small position at a sweet cost basis if that's your intention. You know, I'll give you a perfect example, okay? And the internet was as big as ever, right? There's nothing bigger that I experienced than the internet. The internet leaders, the legitimate companies that were printing money that are still around today, okay? They all got hammered when the music stopped. And all the ones that are around today, you know how many times they changed, how many different businesses they got in from now till then? I'll give you a perfect example. Amazon. Okay? They were selling books on the internet initially. Books. Do they even do that anymore? Right? AOL. Was anything bigger than AOL online with emails, all that? Gone. They got acquired, luckily. Otherwise, that stock be at zero. Yahoo? Remember Yahoo? You know, so this is not new. This is not new. The best advice I could give you guys is you try to trade these things, and if you nab them at the right spot, like I'm not tooting our own horn, but a lot of us in the Steam Room have owned plenty of these names at sweet spots. You leave a little piece behind that you forget about. Profits paid for it. Leave it alone. Forget you even own it, and tuck it away if you think it has a future ahead of it. But that doesn't mean you're not going to have to sit through some correction and bear market along the way when it shows. No avoiding that. But if you have a small enough position at a nice cost basis, you might get through it. You might get through it. Okay? And on the other side, if these things run for another month or two, are you that good? What are you going to do? You're going to be able to pull the plug and get out of the way before the music stops? What are you Houdini? You get 2 days in these things, bink, bink, and you're going to see blown up accounts all over the place. So you gotta be careful. To state the obvious, you gotta be careful. Oh, somebody else, I think it was Bova. Bova likes this thing a lot. Super Gal, Shark Ninja. I think it's one of their top picks. Right? And like you guys remember even Shark Ninja, right? Like the fundamentals drove this thing. You know, got a little crazy, yes, but it's kind of dealing with that now. Yeah. And that's a good segue to what about the more speculative names, okay? Because I'm telling you, I'm not good enough to call major tops. I don't think anybody can, to tell you the truth. Maybe they're out there, but I don't know anybody, okay? But if a name like this, okay, is what they say the future holds, okay? Or there's another run in it, per se. I mean, this looks blow off to me, but maybe there's another run in it. Okay. This is likely to happen, something like that. And if you like this name, this is what you look for as a setup for an entry if you think there's more to come, in my opinion. That's what you look for. Okay, so the point I'm making is they're gonna at the least have to go through something like this. At the least. Okay, this went to 60 and came down to 20. 60 to 20. There were people paying $50 and $60 for this thing for a good month before it came down to 20. I don't know, Sergio. I don't know what they're saying, but they jumped up for whatever reason, I mean, I get it. Even like Goldman, you remember, you love the group. I don't have to tell you. I mean, people were pounding the table on this whole group for a long period of time back here. But, this, again, take the name, the sector, what they do away. This looks blow off toppy to me. I don't know. And it's not the only one. There are stocks and stocks and stocks and stocks. I mean, even little bit farts. Look at little bit farts. Bit farts. We're talking about bit farts here. Good old bit farts is up sixfold. CDZI, no. I don't. I sold everything new. I'm out of CDZI. Everything that was new. What was the other one? There was a robotics play. There was another stock too that had a nice rip in a day. You guys know it. I think some of you still trading it. But I can't think of it. Yeah, I don't. The only names I own right now, I own this guy, which I'm hanging in there. I'm still up on it, so that's why maybe I'm hanging in there. But if it starts to sell off, I'm not gonna. I don't think I'm gonna ride it lower, to tell you the truth. But I'm still in it. And the other one that I'm down on is this that I'm still in. AUR. GoPro. I'm out of GoPro. I made a nice hit on GoPro. Oh, BTQ. That's a quantum name. I day traded this today. It caught action. It's a quantum play. I don't know anything about it. I had a nice little quick move off the action. That's all I was looking for, basically, here. Again, a month and a half ago, I'm probably still holding this. But, it's up from 2 to 15. You know what I mean? Maybe these hot stocks, don't cool off altogether and they cool off separately. But, man, that makes it even more difficult to me. You guys know I love these things. I love these things. I just can't buy them now until they get washed out. If they get hit over the head, any new names that catch action, I'll probably start participating again. But until the juice gets wiped out in this stuff, it's too much risk. It's not worth it. It's just not worth it. Uroy, I didn't play that. That's uranium, I think, right? A lot of volume in this. This, I think, is a retail favorite too. A lot of retail activity. I mean, the majority of these things are, outside of rolling, it's all retail volume now. Roy Jenkins. But again, what is this? Uranium? 23 million in revenue? What, I don't know what the hell this is. RBRK, that's a real name. You know, hasn't been doing anything, but that's a real name. I'm still holding RBRK. You know, I'm still holding RBRK. And I think this is normal for what the stock has done. Right? Did it here, it's doing it here. But it's a real cybersecurity name. It doesn't mean it can't go lower, but again, it's a real name. See, like, and I was telling Sahil this. My goal when I leave stock behind, okay, the majority of stock that I leave behind. So in other words, I buy something, I make money on a trade, but I like the company, so I leave a small piece behind. Usually they're real companies, like they got real growth fundamentally, you know what I mean? Or they're in a hot sector and they're going from losses to profitability, stuff like that. You know, like these type of names. Right? I don't like leaving speculative names behind unless it's early in the phase. You understand? Like, in other words, when this rally started in these smaller names, you want to leave a lot of them behind because they're just starting to heat up, right? So I give an example, like these Bitcoin miners, okay? When I took positions in them, when I sold them, okay, I left nice little chunks behind in all of them because they just hatched. They just hatched, right? So now you got Wolf from a $2-3 stock is 15 now. But here, this is a whole different story, my friends. 15? This is insanity here. Okay? 15 over a couple of years, right? Whatever, you know, a year. Come on, 15 in a month? This is bonkers. Bonkers. You know, even Hut. I remember a lot of us were pissed off at Hut because it wasn't moving with some of the others. Oh, but it started to move, all right. Big Deer, this was a laggard, and it went. It went. Look at this. So, listen, at some point, right, especially when you're right and you make money, you got to pat yourself on the back, cash your chips, and chill out. If you don't ever reach that point in this game, you're headed for a brick wall time and time again. You understand? The end result's always going to be the same. The name of the game for me, okay, and it's always easier said than done, but the name of the game for me is to pick up on these things before everybody else's eyeballs are on them. And what helps me pick up on them is the sweeper activity, right? And then when they hatch, sell them and leave a piece. But once they hatch, especially in a big way, that's it. There's no edge anymore. Okay, now you're in the same pile of retail traders and investors that are out there. What's your edge? You know something more about Oklo than the other guy? What the hell do you know about Oklo that's not in the stock already? The stock's up 800%. What's not being priced in that you know about? Oh, AI, blah, 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 blah. No kidding. The stock's up tenfold. There's no edge anymore. I don't care if your best friend's mama's Kumara on the side is the CEO. The A guys hatched in all of them. You know? So now for like the newer ones that are lurking around and starting to move, like even this new one, BTQ, whatever it is, I don't want to aggressively buy the last litter right before these things cool off. You know, you want to be early as possible. So, we'll see. But there's the beauty again. The good thing is there's a whole other market out there outside of this stuff. A whole other market. And again, I think the light at the end of the tunnel, market wise, is here. Let me show you, just as a reminder. This is where those speculative names topped out. In 2021. This is what happened to the market. And you still had this left. And more, right? Yeah. And more. Okay? But if you bought the hot stuff, this was in store for you. All right? So that's why it's important to try to pick up on what the other side looks like out of this. I don't, that doesn't make me, I don't like to hear that. I'm being honest. Because I'm telling you, brother, I'm telling you, there's no reason for me to lie. That was my biggest problem in this game. My biggest problem. It was so frustrating. I see it's probably the most common thing that knocks people out of this game is that they trade every day, every week, every month the same way. And that's great because in a bull run, you're going to make a shitload of money. But when that momentum comes to an end, it's always the same result. And it doesn't take much, right? Because here's the problem. You trade aggressively, and here you're caught with a basket. And if there are calls, just this knocks out all of that. Right? Not like it's got to retrace the same amount because calls go to zero. This will wipe out the majority of profits you made. So, that's what I'm telling you. When I hear you're holding bags, that doesn't make me feel good at all. I hate to see people do that because I know I've been there. That's why you have to figure out something that allows you, that gets you to rein it in when you need to rein it in. You don't have to go to all cash. We're all degenerates. We all understand if you don't go to all cash that you need to play, you need the action. But you got to at least size down. You have to pay attention to the risk. You have to act differently. Because it doesn't matter what, how good of a stock picker you are, how good of an analyst you may be. None of that will matter. Because they all go down the same way. Yeah. So that's fine. That's fine. You know what I mean? That's fine. That's fine. Giving back money is fine. Because what you're doing is you're risking a little more to make a little more. That's fine. If we bounce here, the flush will be bigger on the other side. Yeah, I mean, in what? The whole market? I really don't know. Again, I really don't know. I don't think, again, who knows what's lurking here in financials and stuff like that. Again, I don't know any more than you guys do, but barring something major, I don't see the market correcting in a major way. But, I could be wrong. I could be wrong. But I'll tell you one thing, a correction, if we do get a correction, I'm going to be looking a lot more aggressively to take advantage of it for opportunities. But no matter what, I'm not buying stocks that are up 300, 400%. That's for shit sure. Yeah, it would. I mean, the truth of the matter, though, like I say that too. The truth of the matter, though, it doesn't even matter where the market goes, because, like I said, you got a lot of this market that's been almost like in bear market mode. You got chunks of this market that haven't done a damn thing. That's why you have like a lot of these sentiment measures, like even like stuff like this. Right? This is from the San Francisco Fed Daily News Sentiment. You're in what you see in correction and in bear market territory here. Because a huge chunk of the market has been dead money. Right? You had healthcare was in an all-out bear market for a while. Yeah, initially was the mega caps, and now I think more than that. I think the mega cap rally stalled already. Like the mega caps have been frustrating to a lot of people, a lot of players, because they were overowned. Like, look, Microsoft hasn't done jack. Okay, if you bought Microsoft August 1st, you'd be down today. You'd be down throughout. Right? So a lot of these stocks already had topped out, slowed down. The momentum came out of them. I think where the sizzle has been in these speculative names. They've been in the speculative names. So if you get a true cyclical bull run, you got a lot of names that have a ton of upside if that gets going. We talk about like small caps. A lot of the stuff we've been playing aren't even small caps. They started off as micro caps. Mid caps, same thing. God forbid these things get hot. You're talking more like these type of names, right? Or even the one you guys just mentioned. These start off as small caps, market cap wise. Yeah, I mean, you guys are rattling off names to me. You guys know, like, say, like even a name like this, unless it catches sweeper activity, I'm not just going to pull it out of my rear end and buy it, because I don't know when this thing hatches. You understand? That's the problem. I don't know when this thing comes alive. This thing's been dead for ages. So what I need to see is aggressive sweeper activity step in now to tip me off. Right? If all of a sudden we come in tomorrow and a band of call sweeper activity comes in buying March calls in this thing, that's your sign. That's your confirmation. That's generally what we're looking for. Otherwise, I could get stuck in this web for ages. For ages. But there are a lot of these type of names. A lot. IoT. I've heard people talk about this IoT. This used to be a Kathy name, I think. There are so many names like this, even bigger, larger, looking like a Home Depot that was going to benefit off Fed cuts. You got a lot of stuff. Anything tied to the economy, right? Transportation, healthcare, big chunks of this market. And I'm not saying AI has to die. I don't think AI dies, even if it goes through a correction. You know, you just, like we've been seeing, you're going to see this AI theme continue to spread if there's more to go. It's going to benefit other pockets of the economy. That's what usually happens. And then, you know, that's what we saw, right? If you rewind what we were talking about, initially it was just the semiconductor. Well, at first it was the mega cap names, then the semis, right? If you wanted to benefit from AI in the market, that's all you could buy. That had to broaden out. It couldn't last. It couldn't go on without broadening out. Then what happened? Then we started to see the power that AI needs, right? You start to see these power industrials, these data center plays. Right? And it continued to broaden out. You know, now to the point where even the most speculative stuff has caught fire. But you know, and I'm saying, like, even if AI doesn't go away, the upside slows down for a period of time, right? Where the hot money focuses on elsewhere, looks for value elsewhere because they're over-owned and overextended. That's what happened with Mag 7. Everybody who wanted to own Microsoft already owns it. Know what I mean? What fund doesn't own Microsoft by now? Everybody does. No. I mean, CoreWeave, I don't put it in that spec bubble with the other names. No. So I don't put in that category. I think CoreWeave, you know, again, the flow here is tough, but like, for example, the Jan action that we've been seeing is more than likely October rolls. But hypothetically, let's say it caught that type of Jan action, I think it's worth a look here. You know, it's worth a look here. Yeah, I'm talking about stocks that are up literally Eiffel Tower in a straight line and most of them have zero revenue. You know, pure speculation. Oh, that's another thing that I think can benefit this market. IPO market possibly heating up, right? And you get newer names. And remember, there was a time where it was so slim pickings out there that's what we were focusing on early on in the rally. Companies that would just come public because it was new names. You know, so now things come public and we don't even know about them because the stock hasn't done much. And then they start seeing flow and they break out. You understand? And that's what's got me optimistic about things in this market, you know, overall. And still, you know, again, it's earnings OPEX right now, this week and next week. And that's what's got me, you know, the flow tells me nothing. So I can't even share ideas with you right now. You know, but once that's gone, I'm looking for new areas, new names to pick up on buying. I'm just trying to avoid the speculative arena as much as possible until they rinse out. And, you know, we could see that now. Prime, what do they do? Is that fintech? Is that like, I heard of this Chime. Oh, man. Yeah, that's an IPO. Look at that thing. Yeah. So, you know, Bitcoin. Yeah, you know, this is another sign, like, you know, what's going on here, right? This hasn't acted right. I don't know what the hell's going on. But yeah, I can't handicap Bitcoin. I don't know what the hell's going on there. This gold has got me. I can't. What is gold trying to tell us? I don't know what the hell it's trying to tell us. See, and that's the other thing. Like when we get, if we ever, whenever it shows up that true bull market that I'm telling you about, that's not solely around AI, but you know what I mean? A bullish market price action that is betting on a better economic times, I guess, is the explanation. I would see gold selling in that environment. You know what I mean? Like gold shouldn't be ripping in that environment. Now, I'm not saying we have good economic times, but I'm saying if that ever showed up, you would think gold would go into a correction in that environment. Yeah, industrials are always there. I mean, even now we've been seeing the industrials. You know, listen, this to me, this has been more real bull market than any rally we've seen since 2022 bear market, in my opinion. This rally. You know, again, it's just the speculative areas they're overdone. They got way too hot. That's all. Like that's what I mean. If you can avoid, if we can avoid a recession and you get the Fed on your side and now you get Trump stimulus on your side, what I think this has the potential to turn into a true cyclical bull market. I think the upside that may be left, but it just hasn't shown up yet. You know, for good reason. And now you got an economic shutdown, so you don't even know. It looks like the economy is still slowing a bit, but we don't even know. We don't know what the hell's going on. All right, but I'll leave it at this, right? I think now, anyway, well, what I'm doing, I think we want to be real nimble here. Okay, no matter what we do over the next few weeks, I think you want to be nimble because there's too much risk out there. It's not even market risk. You have earnings risk. Okay, you could be sitting in a core weave, for example, thinking, you're avoiding speculative stuff, the market's okay, and then some AI name that reports numbers shits the bed, and you're going to get lumped up. You got earnings risk all over the place right now. Now, TSM and ASML, they actually were good results, right? But who knows about the rest of them? So there's too much, in my opinion, there's too much risk right now to stick your neck out, regardless of the price action. So I think the way to combat that is to stay nimble, right? Try to take advantage of extreme short-term momentum. And I think some of the signs we look for on the bullish side, okay, because something's got to happen here. VVIX cannot continue to do this and the market doesn't break. So one or two things have to happen. The market breaks down or VVIX breaks down. You understand? You can't price in this much volatility and the market sit here for another few weeks. It's not going to happen. It's not going to happen. So either VVIX is going to top out and unwind, and if we start to see that, that's our cue to get long, right? For trades, especially on an intraday basis. But if VVIX continues higher, more than likely equity's got to come down hard for whatever reasons out there. So that's what I think we kind of look for now. We kind of look for divergence the other way, right? You see some equity weakness, but now with equity weakness, VVIX is not moving higher. It's coming in, right? That's your first clue that there may be a turn. And again, I'm stressing that's at the index level. Okay, that may not mean the speculative names turn. It's possible, but it doesn't have to mean that. You know, so now I think you are playing wise, momentum wise, you want to try to stay close to the indexes as much as possible. Again, the total opposite of what I've been preaching the whole rally. You know, because if you're playing for a market turn, you want to make sure when that market turns on that short-term trade, you benefit from it. You don't want to take the risk playing for a market, then the market turns, but the stock you're in still goes south. And I think that's pretty much the game plan for at least next week. And then hopefully we start to see the flow sweeper activity start to clear up as we get some of these bigger names out of the mix. You got some big earnings coming next week. Huge earnings. You know, huge earnings. So we'll see. No reason to try to predict. Let it play out and try to react and be quick. I think that's the best we can do right now for the next couple of weeks. Yeah, you could exactly, James. That's kind of what I'm leaning to. Exactly. You know, again, if let's say, for example, let's say we get a market turn and we, even though they're rolling or whatever, we start to see Tesla get bombarded, or maybe like weeklies in Tesla. I'll play like a TSLL. I played it a few days back when they were hitting it. But again, that's just intraday. You know what I mean? Intraday. But to James's point, you know, it's a good point. You want to try to stay as correlated to the indexes as possible now to take out some of that other risk, you know, that we've been talking about, that correlation risk. Rolling over, are there any bets that look interesting at all? Honestly, Cash, if there was, I would share them with you. I'll give you an example, okay, what we're seeing quickly, okay? CoreWeave. There's been huge size Jan call buying, huge. But how do I know that's not October positions being rolled out? There's no way of knowing. CoreWeave has huge October open interest. Huge. You understand? So that buying stood out to me the past 2 days. But I don't know if it's clean. Tesla, huge December call activity. Humongous. All right? But you don't think Tesla has huge October exposure off this run? Right? So you don't know. Could be just flat out rolling. They could be taking size off for all we know. I'm trying to think of names I played. What's that name today that I day traded? The Spec Quantum name that you guys were talking about. Let me see. Somebody posted it earlier. I could dig it up. It was with a. Oh, I can't find it. One of you guys will guess it. Anybody remember that quantum name? Hold on. I don't want to spend too much time looking for it, but now I'm on a mission here. Dang it! Always something like this annoys me. BTQ. There you go. Thank you, guys. Oof, that would annoy the guys. So a name like this, there was some Jan call buying today. BTQ. You know, on the spec side. What else? I'm trying to think what I played the last couple of days. Day trade. But honestly, nothing that I have. Oh, Teladoc. They have earnings and there's October open interest. But there's been Teladoc buying for a good month now. You know? But you got earnings here. 10.29. So there's been some decent Teladoc buying. So it's stuff like that, Cash. You know? Again, just I can't have conviction any of this recent flow is clean. That's the problem. But those are some of the names. Hims, well, Hims, they played weeklies. Yeah. See, that's the thing. Like, all right, Hims, yesterday was a nice trade. They were playing weeklies, right? You know, you look for more in this market, there's more risk. So, this is kind of what I mean. Again, you're not going to get rich day trading, right? I'm not saying that, but there are times like this where it keeps you involved. And if net you make some money, right, while biding yourself some time, that's a win in my book. The time to swing and swing aggressively has come and gone, right? We're looking for it to reset, a new setup. You can't play every climate the same way. You can't do it. Now to see follow through, there's so much more risk. So much more risk than there was. Think about it. We had CTAs on our side. You got CTAs and systematics against you now. They're sellers. Right? A lot of all those things we had as a tailwind behind our back. Correlation, the unwind of correlation, the unwind of volatility. All these things are against you now as a bull. You're fighting these things. Why? For what? Why? Do you need to force it? You need it that bad? Especially if you made good money over the last few months? Why? Yeah, James, why put yourself through the agony of that? And God forbid things get a little slippery here. That's not bad. That's good. Okay? Because the setup on the other side of that is going to be a sweet spot, right? Because look, you're fighting correlation shooting up higher now, okay? And when it does that, the market's coming in. You got momentum going against you. But then once correlation tops out and unwinds, okay, even if it's a short amount of time, that's where you get that tailwind behind your back. So you're fighting too many forces right now, in my opinion, as a bull. If it rallies, let it rally without you. That's why you play intraday. The market's bullish one day and there's some nice momentum. Try to take advantage of it intraday. Sometimes you get lucky with moves. They're really nice. They're better than swing trades. Yeah, you can't. It's not worth it. It's just not worth it. In my opinion, it's just not worth it. I understand we're degenerates. I am too, but it's just not worth it. Right? And, we were spoiled. We're coming off a time where, we're buying $1, $2 stocks and they're going up immediately. We're spoiled. You're coming off that now and it's a lot more difficult right now. Yeah. But James, that's what I'm saying. Okay, maybe it goes higher again tomorrow, but there's a lot more risk, There's a lot more risk. But if you got in the middle of this move and made some money, you take that off the table, who's better than you in this right now? Yeah, that's what I mean. So, again, we're not saying we stay like this permanently, but this is the playbook for this environment. That's all. Yeah. Got to look yourself in the mirror here. All right, my friends. I'll leave it at that. All right. So we'll look for some divergence in the other direction. Let's see how this shakes out. Try to make some quick money here and there without getting lumped up. And then once we get sweeper activity back, we'll see where things stand and we'll reevaluate. Yeah. OPEX too. All right. We didn't even talk about that, right? A messy, sloppy OPEX on top of it. So just put another one in the basket there. Thanks, guys. Thanks for stopping by as always. All right. To Steam Room members, I'll see you mañana. The rest of you, enjoy your Friday weekend, and I'll see you guys next week. Have a good night, everybody.